Today we're going to talk about how much money you really need to start trading in the stock market and where do you find that money. We'll go over that and lots more coming up next. Hi everybody, my name is Dee Burks and this is Retirement Rescue, where we talk about how to make money, save money, and create retirement from nothing. Well, part of that strategy for me, as many of you already know, is trading in the stock market. But if you're new to trading, how do you get started? How much money do you need? And where do you find that money? In this video, we're going to be talking about the money's part specifically. You can get a lot of education, and we'll talk about that separately in a different video. But in this video, we're going to be talking about the money. If you'd like to follow along for more trading videos and lots more, then click the subscribe button and hit the little bell, and you'll get notified when those videos pop up. Now let's talk about the money. First of all, how much do you really need? You'll see lots of videos on YouTube and lots of other people talk about, oh, you can start with $500, you can start with $1,000. All of that is true. Many companies allow you to open accounts for that small of an amount. Well, the problem is when you start with a really small account and you work really hard for a month and you only make $150 or $300, let's say, if you have a $1,000 account, it gets frustrating. So what happens is those people, they tend to take on trades that are riskier and riskier. They're wanting the big win. They're wanting to make several $1,000s. But the problem is they don't have enough in that account to actually realistically do that. And so their frustration leads to them losing money. And that brings up another good point. You only want to trade, and especially in the way that I am trading, swing trading and day trading, you only want to trade with a very small percentage of your assets. You don't want to spend all your money trading because you could lose it. That's realistic. You could lose it. So only trade with money you can stand to lose and make a commitment up front. You're going to leave that money there, because I've also seen this problem. People will do really well. They'll get up to 5,000, then 10,000. They get really excited. Then 15,000, then 20,000. Then they decide to buy a car and they spend all the money. They have just killed the goose that laid the golden egg. They have nothing else. And so now they're going to have to build money up again, and they get very frustrated to start with $1,000 again. So you have to commit up front. If you're going to trade and be successful long term, you have to build enough assets in that account without touching it to generate a consistent amount of money. That is something you need to think of up front, and you need to decide up front, because as that account grows and you see that number getting bigger, the temptation to use that money is there. So if you're going to commit to long-term success, you got to leave it alone. Now let's talk about where to find the money to begin with. Well, this year especially, there has been money flowing into a lot of people's accounts that was unexpected. Take the stimulus money. Did you get a stimulus check? Do you have a spouse? Did you get 2 stimulus checks? What did you get? If you got $1,200, $2,400, $3,400, however much you got, what happened to it? You know, if you say pay bills, basically what you mean is the money flew through your fingers and you don't have much to show for it. That's what everyone says. You are in control of your own bills. That money was unexpected. So that is not money you were expecting to have anyway, but then you used it. You didn't use it toward building long-term assets. So we're about to get a new stimulus. Hopefully we'll get more stimulus money. But if people get more stimulus money, this is a great way to use it. It's unexpected windfall. Now think back to your last tax return. Did you get a return? What did you do with it? You know, I used to live next door to a really young couple, and they had several kids, and they got a tax return one year that was almost $8,000. They went out and they bought a Cadillac. They got repossessed 6 months later. They blew the money. So many people do that. If they had put $8,000 into that account for trading and they had learned to trade, they could be very wealthy right now. And I promise you, they're probably in the exact same situation because they didn't do it. They had money flow in. They had a good chunk of money flow in. They didn't even use half of it to start building long-term assets. So think about that. Do you get a tax return? Use it for something other than paying bills or going to the dollar store and buying a bunch of junk. Stop that. Start building long-term assets. Now let's think of another couple of ways you can also create some money for a trading account. Now remember, you only want to use money you can lose, and it needs to be a small percentage of your assets. This year, we have basically a tax window for 401k withdrawals. You're not subject to penalties due to the recession. You're able to take some out. If you want to use some of that money to then trade, because you can't trade, swing trade, day trade inside a 401k. That's not allowed. They don't allow you to do that. But if you want to take some out and do that, use a small percentage, less than 10%. And you can do that. You can take it out. Now, it has to be repaid within 3 years. But if you do well trading, you can do that. You can pay it back and have no issues. But understand, you could also lose that money and owe taxes on it 3 years down the road. So be very careful before you do that. Now, if you're leaving an employer, if you have money coming from maybe vacation time they owe you, they're going to send you a check. If you have just a small amount in their retirement plan and they just send you a check and it's a few $1,000s, this is perfect. Here again, that's not necessarily money you were expecting from income, and you can set it aside and start trading with it. So that's a great way to use that money as well. That's what I did. When I first started a trading account several years ago, it was money that came from me leaving an employer. And they paid out my vacation time, and I had like, I don't know, $2,500 in the savings plan, so it wasn't much. And they paid that out to me, and I put all of that into a trading account, and that's where I started. You can start there too. Now let's say you're not leaving your employer and you don't have an unexpected windfall. Where else could you get it? If you are paid by your employer every 2 weeks, there are 2 months out of every year you get an extra paycheck. You can take that extra paycheck and put it into a trading account to start to learn with. And you do that over time and you will build up several $1,000s. And then you can really start trading with it. I really believe that you need somewhere between $2,500 and $5,000 to start trading and be happy with the return. You can absolutely start trading with a smaller amount. You just have to be really careful that your psychology doesn't trick you into believing that you want to bet it all on number 9 for the big win, because that happens. So the more money you have in there, the more cautious people tend to be. And that's a good thing. You want to be cautious when you start out. You're not going to win every trade. You're not even going to win necessarily a high percentage of your trades. Eventually, you'll be able to win 60, 70, maybe even 80% of your trades. But that's not going to happen right off. You are going to lose. So you need to prepare yourself for that and understand that money is there for you to lose. You're not going to have to live off of it. So that is one great way to get your mindset straight and start trading even with a small amount and still be successful. But I encourage everyone, stocks are not a big mystery. It's not something that's only for elite people or people who have a certain education. If you have basic common sense, even though I realize common sense is even more uncommon these days, but if you have basic common sense and a basic understanding of human behavior, you will probably be very successful in the market, because that's all it is. It's a basic understanding of common sense and how companies function. It's a basic understanding in how people react to positive and negative news. That's it. It's pretty straightforward. So if you'd like to keep up with me and the plan and how it's working for my trading, you can click subscribe, hit the little bell, and I'll see you next time.